Hello, back again another week, and we've got Mando from the Rekt Drinks umbrella, Rekt brand umbrella, I should say, as well as Yeet, and a number of other things within the space. Mando Minutes newsletter, big name across CT as well, so excited to have him on today. We're going to talk a lot about the Kaito updates and what that means for the fact that a lot of people are very pissed off, what we think of the situation. Is it better for the timeline? Is it better for Kaito? Is it better for the companies that work with Kaito to kind of manage leaderboards and stuff like that? We're going to talk about the Stripe L1 stablecoin blockchain that has broke overnight since we were recording this. And then we're also going to get into the fact that how strong it is to build a brand on the back of crypto communities and the success that Rekt and that whole brand world is having now on the back of that. So I also need to say sorry about the technical issues at the start of the episode. My mic and AirPods were all fucking up. Grant was getting loads of feedback, so do bear with us. It fixes itself about 10 minutes in. Right, there we are. We're live. Big week, another good guest. We've got Mr. Rekt Mando with us this week, man. Thank you very much for joining us. Founder of Mando Minutes, invested in all over the Rekt brand family. I don't really know how else to roll out Rekt out before you, pal. Thanks for coming on. Yeah, prolific, yeah.
Yeah, you stick around for a long time, you start getting involved in a bunch of different things. But yeah, Mando Minutes is the newsletter I do. Rekt Guy, which has then turned into Rekt Brands, I was one of the co-founders of, and then I've been involved in Yeet recently, which is also one of the co-founders of. But I mean, it must be the same for you guys. You stick around for a long enough time. You say, I'll do a little bit of this, I'll do a little bit of that, and that's just how it's been.
Basically, yeah. Grant, have you been asked for a selfie yet?
I've had a few, yeah, but I just feel I'm way too embarrassed, so I just fucking run away.
It's always at conferences, isn't it? When you're mid conversation, you get those weird people that I'm in a direct conversation with another human, and they just shuffle in, and they don't
sandwich
even
in between you, 2 pieces of bread,
yeah.
and just big patty in the middle.
Very difficult being a crypto celebrity.
Yeah, not me. But you two, you two are both being far too humble there about the audiences that he's having stuff. But it's good to have you on, mate. So if you listen every week, you'll kind of know what the structure of the show is at this point. If you don't, I'm going to get through the what you need to know section first, and then we're going to drill down on a few of the things that we just want to talk about between the three of us that have kind of been of the most interest in the past 7 days. So headlines first and foremost. Let's try and get through them without me fucking up the pronunciation. Literally everyone, like I did last week with Wadge. So Pump.Fun unveils glass full foundation to accelerate the most organic, vibrant and promising communities within its ecosystem. Kraken's Inc. crosses 2.5 million in unique addresses. Giza surpasses 1 billion in agentic volume. That's 100% autonomous, zero human involvement as well. Stripe has teamed up with VC giant Paradigm to build a new blockchain called Tempo. We are going to get into that one quite specifically, which broke overnight in between us recording this, I believe. Jeff Bezos' Blue Origin will now accept Bitcoin, Ethereum, Solana, USDT, and USDC for trips to space. Potentially Tron under the table as well, but allegedly. Coinbase introduces DEX trading for US customers. And on the 8th of August, Trump signed the executive order allowing 401k plans to include digital assets, which has kind of set the tone for what we've seen recently with the move up in the market. It's been a fun few days. But the first thing I wanted to get into this week, which I've been looking forward to kind of yapping with the fellas on the podcast about this, is the Kaito updates. So before we get into the story, I want to know, Mando, what's your take on the whole Kaito experiment and situation so far before we get into the crux of this? I know we said that we'd go around the houses from an answer point of view, but what's your opinion on the platform and kind of what it's done for the space throughout the year?
I think it actually solved a very useful issue at the start, which was really let's try to improve the content of crypto Twitter, move away from just big accounts shilling to this idea of, right, we're going to reward engagement, particularly deep dives by smaller accounts into projects. And that's kind of the environment that Kaito was born in, right? We just came off the back at the start of this year where there was kind of a turn against KOLs after Libra. and it was like, right, this is an environment we actually want to reward people that are giving back to the community a little bit more rather than just what's the ticker, let's shill it. And I think they did a really good job of capturing that, and they built a very good community, and they kept on innovating. The only issue is that as soon as you start incentivizing anything, you have people who try and get around how to get that money, right? And there's a lot of money is poured into this. One of the projects that obviously I've co-founded, Yeet, actually has been a user of Kaito, and we signed up with them a few months ago. And I think it's clear for someone who is also using them as a product as well as just on the timeline, like it has descended, or it did descend into much lower quality content just because of the ways to get around of whatever algorithm they were using. And it was very, very clear.
Yeah.
A lot of AI content. It wasn't bots. It was accounts using AI content. They've just asked ChatGPT for just a tweet about a project. And so, for example, for Yeet is a crypto casino and sportsbook, but there is another project on Bearer Chain called Yeet. And if you typed in, hey, give me a tweet about Yeet, we would get tons of people just tweeting about us on Bearer Chain, like, oh, it's a Bearer Chain project.
Yeah,
we were like, it's
not even
clear how this is broken down. And I think what they've done in the last week is they've moved to try and rectify that and try and bring it back to maybe its original aims. Now, what that has done is nuke a lot of smaller accounts, and maybe there is some collateral damage there. But I think what they are trying to do is the right moves. I think what really set this off is what happened with some of the bigger projects that were giving out hefty rewards every single month. I think Infinex, right, is like one of the biggest promoters of them, and they're seemingly in a bit of a war right now with Kaito because they were giving out millions of dollars of rewards and they didn't feel they were getting much back from it. So I hope over the next few months we'll see better changes to it. We've seen changes to the leaderboard we were using, and I think it's actually okay.
Yeah, I was going to mention Kane because he's been quite vocal with the whole mess that they apparently got themselves into with it. And I think even from hearing your opinion on it, Mando, before we get into this, I know the tone of the conversation we're probably in alignment with what we think of the new rollout that they've shipped. But what do you, from a Yeet point of view, though, how were you sort of like validating people that were kind of coming in and, as you say, just pure slop, not even too lazy to even check if it was the right project? Like, were you guys just letting people do let them do their thing and then kind of relying on Kaito to police that, or was it becoming a logistical headache for you as well?
Yeah, let me just let you a little bit under the hood. So you do a deal and they essentially decide the algorithm, but you can tweak certain things. So if you say, hey, we want to really reward people in a certain geography, or I don't know if it's demographic, but like you had certain things that you could tweak, but you couldn't revamp how they were doing the basic algorithm. So if AI slop essentially was being rewarded, you could only really like tweak which bits of AI slop you were going to reward. So there wasn't really much control from our part, and there still isn't much control. We kind of let them, and we kind of have largely we've stayed out of the politics of Kaito. So we have some users that come in and be like, oh, I'm down on the Kaito leaderboard. What can you do about this? And we've just kind of been like, look, it is their platform. We bought into this, but like we can't police this. So so we have kind of just put the mirror back on them. I think obviously Infinex have taken a bit more of an aggressive role in this, and it's to the benefit of everyone, to be honest.
Yeah. It's Grant, we were saying, weren't we, that the whole, I think the initial out the gates product, what they did, and we love the Kaito team, by the way, we kind of invested early on and stuff, and the whole smart following thing is the wackiest one for me. In the last few weeks, I've had people following and unfollowing me relentlessly and replying to every single one of my tweets, trying to get me to follow them back. And I think, Grant, you were saying you'd had the same, hadn't you, where people will be DMing you and saying, follow me or reply to me or weird shit.
Hello, sir. Can I get a follow?
Constantly.
Like, no,
is my DM.
Fuck off. my DMs currently are, hello, can I get a follow? Or it's, what is the contract address? Entry, stop loss, take profit. It's just like I'm their little personal fucking bitch.
Yeah, I can share my screen right now, and it is literally just, hi, I'm a kind of contact, mind following each other. I really like your content. Would you like to follow each other? It's, oh God. Hello, family. Please follow. It's like
it's so weird.
It's like the point where I never want to be one of those people, and I never did it when I was running the main Blockmates account, when that was my personal account, where people get a few followers and they start thinking like, oh, I'm fucking too good to reply to people who engage with your tweets. Like, I'll just like reply to basically fucking anyone like an idiot. But now it's like I'm literally having to check, am I going to look like a complete idiot here because I'm just going to be replying to some like either a bot or, as you're saying, like Mando, just like someone who's either using Grok to generate a reply off the back of it. And then it's just like, I've got this kind of like dead crypto theory, like an expansion on like dead internet theory. And I think there's probably us three and maybe like 10 other people in the industry.
One thing I do know about being involved in that community is that they are real. They are real, but they are often not, they don't like really follow crypto. They just follow Kaito. So they have an X account and they found out this is a way to monetize, and like they get involved in that way. And they have very little knowledge of your project. They're just kind of there to farm.
You know, there's like a section of Twitter though that obviously since Elon took over and there was the creator payouts, there's also a section of Twitter that you sometimes, you know, when you go like down a dark alley on Twitter and you stumble into like you're like, oh fuck, I didn't know this existed. There's also people that were kicking off recently about the creator payout changes. So there's obviously people just generating content off the back of trying to get, like just the direct Twitter payments that people get, right? So Kaito is that on steroids again, and it's obviously like the people who are at the forefront of it have realized, oh, I can get the Elon payout, but I can also get the Kaito payout. So there is like,
that's just, it's human nature, isn't it? That's what NFT God did. Famously quit crypto and went and just tried to create engagement. There's obviously going to be a world for engagement, and we are paying for that as well. Like I actually think there is value in that, but I think Kaito just drifted too far away from anything that was becoming useful, and even like the core users were complaining about it.
But I think as well, you know, in light of everything we've just been saying, in credit to the team, this is why I rate them so highly. They have recognized that and basically come back around and said, we're going to change things up then, whether you like it or not, which is sort of what has led us to this story. So the Kaito AI's latest leaderboard update has set off a spirited debate across the crypto community. Announced on the 8th of August via the platform's official account, the changes are said to be aimed at strengthening the quality and reliability of rankings. Some see it as a necessary step to improve the ecosystem, which is, I dare to say, what the three of us are agreeing on here. And then while others, especially smaller creators, say the move could make it harder for them to grow. So the crux of this is that there's going to be new rules, higher barriers, and they're going to basically implement these changes to focus on filtering out spam, discouraging artificial engagement tactics, and placing more emphasis on accounts that have built a genuine presence over time. So one notable change is the introduction of a separate section for broader community participation alongside the main creator leaderboard. Replies will no longer contribute to rankings, which to me is just thank fucking God, which is obviously a shift designed to curb what Kaito referred to as the reply guy circles, which I know for a fact there were all sorts of weird cabal groups going on Telegram where you could maybe get in and maybe get access only if they'd agreed that you would join the cabal, farming the first like Yap campaign that ran, even separate to the projects that were running them. So then Yuhu basically posted a follow-up tweet, who's Kaito CEO, sorry, I was assuming people would know that while the changes obviously seem simple on the outset, they're being quite complex to implement and a part of an ongoing process to ensure that real creators get recognized. Now, as always, because as Mando said at the top of the episode, those who have been trying to exploit the system are not happy about this. Now, I'm going to read the takes so everyone can get a crack of the whip here, but some of the tweets here, like Telor, basically, I've got his tweet up as well, which he said, Unfortunately, with the latest update, Kaito's new name is Kaito for KOLs. I've been a Kaito user since day one, and I genuinely like their vision, but this new last update is terrible. What made it famous and trendy in the first place was small accounts winning. Their original vision was to end KOL marketing, but now 95% of the lists are KOLs. Small accounts winning is what put Kaito on the map, and now they're ignoring them. That's the gist of that. The counter to that is Jelly, who is working with the Fogo team, kind of one of the friends of Blockmates. He posted this, which I wholeheartedly agreed with. The only ones who'll be pissed are those gaming the new incentive structures who earned more than they deserved. This is a big step forward for original content. And if you think this is just a Kaito problem, study eBay paying for P2P shipping fees, YouTube paying music licensing on copyrighted shorts, long form videos, WAP clipping. So it's tough, this, because when the first Yap campaign came out and the airdrop was announced, the timeline became a toilet, frankly, didn't it? It was just people realized there was a method and they were going to exploit it and they were going to use it. And then it became what we thought was going to be adding value and like rewarding people for creating actually quality content just became gamified. Everyone knew the playbook. And then all of a sudden it was just rinse and repeat copycat content. So yeah. Grant, what side of the fence are you sitting on here? Do you feel sorry for the little guys, or do you kind of think...
Have people tried just having better tweets?
This is my view. Like, I feel people like diminish their own time. They look for the way to they look for the way to make the quick buck. And actually, like, this is why I also think like the X payouts is always a bit silly. It's like, oh, look how much I got paid for my tweet. Like, the value of a good account in crypto is vastly more than whatever Twitter will pay. It's vastly more than probably even Kaito will pay you. Like, if you become a good account in X and you're posting valuable content and you build a brand, it can be worth hundreds of thousands, millions of dollars. Actually, not that slowly. So I think people try and game a system, go like, oh, I can make like $100, you know, and it's like, no, you're missing the wood from the trees here. Like, I think you can create really, really valuable accounts in Twitter with the right tweets and the right content.
I think I've got something basically saved in the draft that basically said a lot of what you just said there. I think if people, and this is the same across everything, right? If people spent as much time and effort as they do in trying to chase this kind of like short-term outcome, if they were actually going to either generate content, or if they were going to pick up how to trade, or if they were going to try and learn how to invest early on, you've only got a certain amount of hours in the day, so why spend it doing something that doesn't have any continuation after this kind of like brief moment in time is gone? You want like a continuation of skill. So like, if you learn how to trade, or if you learn how to write, or if you learn how to create content, video, whatever the fuck it is, at least that's a transferable skill into different disciplines and different domains. And it's such like set amount of hours a day, go and do something that's transferable, and it's infinitely more like upside in that, because everyone's fighting for the same kind of, you know, the same amount of rewards that are left there. I just don't get it. It just doesn't make any sense.
Yeah, it's something that somebody told me early on when I was like trying to create content is what actually sells is being genuine. Yeah. So across any forms of media. So if you come across as genuine on a podcast or a newsletter or sharing your views, people actually really relate to it. So this kind of like fake stuff, like people see through it so easily, and it doesn't work well. So like, even if you're a small follower, you'll find way more value in being genuine than trying to do these shortcuts.
So Mando, let me ask you then, how have you built up a really good personal brand and following over the last few years? How do you think about when you're structuring content, whether it's for the newsletter or not necessarily like an overall marketing level for like Yeet and Rekt and stuff, but like actually producing content for your profile? Like, how do you tend to think about that? Because there's only so many hours in the day, and seeing everything that you balance, sometimes I'm like, how the fuck does he manage to have this flow?
Yeah.
Like, do you plan it out, or is it just shoot from the hip a lot of the time?
You know what? I have thought about this a little bit. So like, it's not something I have not thought about. So I do a daily newsletter, which I put out on X every single day. I think you have to have a base level of providing value to people. Yeah. They come back to your account. So I do that a lot. And then I try and share at least like 1 or 2 times a day, like a view on something. Like, and it doesn't have to be a mainstay view. I'll often do quote quote retweets because I find that people like if you're bringing like a piece of information that maybe they haven't seen on the timeline and you're like adding your flavor to it. So I'll do that a little bit. And then I actually do a lot of memes too. Like I find that that's a very good way for me to build just rapport with people, and like people, they like memes. Like Elon, there's a reason why Elon is posting memes all day, right? And he's one of the biggest accounts on the platform. You can get across pretty complex things quite nicely with memes, and I try and make them topical, so they're not just like generic memes. It's always like, right, what's going on in crypto today? Like, how can I make a meme about it? And I'll do that. So that's generally how. And I actually love making that content. I laugh at like doing the memes. I like doing the breakdowns in the morning because it gives me an update of what's going on. And then I like to think about stuff. So like I'll just post some of those views every single day. So that's how I break it down. It's
like you're saying though, Grant, isn't it? If you actually, not to get all corny about this, but if you're actually like genuine about what it is that you're working on and you're enjoying it, it should, in theory, come naturally, and not yapping like seagulls, as Kobe put it, to earn points on a fucking leaderboard for a campaign. It seems obvious, but I don't know. It's nice to hear, Grant, that we like are not going insane with the things that we talk about.
Like high quality, consistency, unique insight.
If you do that as well, it also allows you to do the KOL bit. So like if you are doing a project, if you've had a laugh, you've given people good content, then they'll be like, okay, well then let's see what he's doing. And I'm sure you'll find you guys too.
You get credit in the bank.
Of course. Yeah, of course. Anyway, that's like nearly 20 minutes of talking about Kaito and CT. So as I said, we had some pretty big news actually that we woke up to this morning. And it is, even though I feel like if I talk about stablecoins much more on this podcast, we'll probably lose all viewership. I'm going to make an exception for this, given what we talked about the other week. So Stripe's 92 billion leap into crypto meet Tempo, its new blockchain. So as I said, like probably last night, this morning, maybe like US evening time, Stripe announced that it's going to like launch its own chain. Now removed job posting from the 3rd of August revealed that the company is developing a new project called Tempo, described as a high-performance, payments-focused blockchain. The listing appeared on the website of the Blockchain Association and was aimed at hiring a product marketing lead with an experience of speaking to Fortune 500 clients. It's quite funny that they've like accidentally posted the role and then gone, shit, we haven't even announced this thing yet. And this is like pretty big news. So according to the job ad, Tempo is still in stealth mode, operating with a small team of 5 and being developed in partnership with crypto for a venture fund Paradigm. So Matt Huang, Paradigm's co-founder and managing partner, also sits on the Stripe board, and sources familiar with the project say Tempo will be a layer 1, meaning it won't be built on top of an existing protocol and will be compatible with ETH's programming language Solidity. Why stablecoins are driving Stripe's crypto push? I don't think I need to explain this. But Stripe's timing aligns with the broader industry shift towards stablecoins, cryptocurrencies pegged to assets like the dollar, obviously. Supporters argue that they can make payments faster and cheaper than traditional systems like SWIFT, which is kind of everything that all of us that have been in crypto for the last few years have been aware of, that now the world is seemingly catching up to. And this has obviously been accelerated by the latest Genius Act that Trump has issued over in the States. So the jump off point for me on this, and I want to go to you with it first, Grant, is, what was it, 2 weeks ago that we were arguing about which was going to be the chain of choice if we were going to talk about real institutional retail money, banks, etc., etc. You have some strong thoughts on this. I just want to let you go on basically this news and what you think.
Yeah, just a quick victory lap. No, because I was always of the opinion, like, if it's the matter of it's Visa, MasterCard, Stripe are obviously in that kind of bracket now. There is way too much jeopardy not to have pseudo control of whatever network they were going to be building their own infrastructure on. There's no way it was ever going to happen on Ethereum. I'd be very surprised if it was going to happen on an L2. And I just don't think that they would go with the likes of Solana, despite it being extremely highly performant. Like, if shit were to go wrong, even if there's like 1% chance of that actually happening and in their core user base funds were at risk, maybe billions, maybe in a couple of years, trillions of dollars, there's no fucking way that they're going to allow a completely permissionless chain to be the infrastructure to enable that. And then, as I said, these guys who came out off the back of it, working alongside Paradigm, you're seeing a similar sort of setup with Converge, which is Athena's new kind of like semi-permissionless chain. So this kind of like lends a lot of weight to what we were saying a couple of weeks ago, that people are going to want to control their own block space. They're going to want that extra level of security, or to be able to stop the bus if they need to. And I think you're probably going to see this trend continue.
Mando, what do you think of this one?
I actually really agree with what you just said. I think it's something that people perhaps got wrong in the monolithic versus modular arguments, in that when big financial institutions come on, they want control and they also want a bit more of a slice of the profits. And I think what we've seen is you've seen some go down the L2 route, or L3 route, whatever. And I think that is going to be a medium-term trend. I don't think this announcement is necessarily like 5 people aren't going to build a faster chain than Solana or like Mega ETH or some of these like, super fast chains coming out. And I don't necessarily feel like we to move stablecoins from one place to another right now. We do it pretty well, right? And we're going to do it pretty well on lots of different chains. It's not like I know it's Paradigm, who's known as like this kingmaker in crypto, or kind of infamous at times, but I don't think they're necessarily going to bring like something crazy to the table in terms of tech. But what this really points to is what you just said, which is the control element. And I think we saw it with Robinhood. I think we're going to see it with some of JP Morgan have their own proprietary blockchain, which I thought was, and so do Goldman Sachs, I think, as well. Like they have, in the past, this hasn't quite worked out, but I think it still points to the idea that when they start to touch public blockchains, they're going to still want control to some level, or they want to have an upside which they can sell to their shareholders. So I think this is a little bit of a worry for these monolithic chains. I do. And I either think we see complete build out of L1s, which I don't think everyone's going to do. Maybe Stripe has the ability to do it, but I do think it points more to maybe L2s having a comeback here, even if the tech at some levels on Arbitrums or Optimism and tech stack isn't going to be as quick as Solana right now. I think the idea is that they'll still prefer to have that level of control and also a share in the fees.
It's funny how everything's like coming full circle again, and we probably end up in a state where all roads lead back to something like Cosmos. Like this.
All roads lead back to Cosmos. Maybe Polkadot. Who knows?
Hang it in the Louvre. So, right. Obviously, this thing is EVM as well. And Mando, there's a few questions that are flinging up in my mind there when you're talking about L2s and stuff. What does this mean for the growing excitement that we're seeing about a lot of these like stablecoin L1s that are coming to market at the minute as well? How do you see this playing out? Is this just going to be like the biggest competition battleground ever? Are we going to see even more liquidity fragmentation than we've ever seen before? Or will this maybe be the home, and then your Mega ETHs and your Fuels and all these sort of L2s start really, really benefiting? There are quite a few things jumping up in my mind right now about where this could go. Grant?
I think
Mando, you go.
I think these are solutions seeking a problem. And I think the problem isn't that we need a better chains for stablecoins. The problem is we need more money for these teams. Yeah. So I don't necessarily think that these are all going to be amazing chains. Like, yes, tell me one thing that a stablecoin L1 is going to do different than some of these other ones. I think what the issue is that these core teams, these kind of like DApp chains, so to speak, often want to have better control over the fees that they're generating, and this is how they're going to go. So this is exactly what Stripe has decided to do too. So the excitement to me, maybe it's in the farming element, or it's in like you can get in at a low valuation versus the fees generated. But I don't think we're really pushing the boundary here with any of these. They just feel like they're just the new way for these teams to make money.
I think the real interesting thing is the interop standard. The entry points and the exit points are going to be really, really important. If we're going to commoditize performance and block space which we already kind of are from a performance perspective, and everyone's going to have their own individual block space, you need the interop, and you need the composability. So it's like, who is going to be the de facto layer of that? Do you then start to see what we're seeing with L1s now, and then the likes of Stripe, Visa, MasterCard, how they've typically done in the, I suppose, the traditional banking space? Do they start to want to have a look at what the interop layer looks like? Or, I don't know, does layer 0 just completely dominate it? Or do we go to more of like an intent-based system? Because it's all well and good having everyone on their own little island, and we can say interop's being solved all we like, but is it really? Like, UX is still a little bit dog shit.
Yeah, I think what you're saying there does make, like, it makes some of these like bridges or the interop protocols that we have suddenly have a bit of a resurgence, where like for 2-3 years everyone was like modular's dead, or there's not going to be enough revenue here for them to be interesting. Like, maybe we see that layer 0 has done this interesting acquisition we think we're getting onto, and yeah, but maybe we see that. I'm not it's difficult for me to say. I don't know if these are like 10x multiple trades, or if they're just like, they're actually just proving that they can actually make any revenue, or like a decent amount of revenue.
I mean, I'm kind of torn on this as well, because I think that, like, what does it mean for, you get a company like Stripe wading into blockchain, and then all of a sudden, if you're competing and you're trying to launch a new chain to do something different from a stablecoin perspective, and look, Mando, as you say, arguments to be made that it's not reinventing the wheel or anything, but how do you compete with a name like Stripe from a distribution point of view? And then everyone's talked about like using crypto rails as the backdrop, and no one gives a shit about how the sausage is made. Like, that feels to me like this is the way this is going. Is this not what we've been crying out for? Like, is that not literally retail adoption in every sense of the word? Stripe using blockchain technology for stablecoin infrastructure, L1.
It is. It's just not how we would have loved it most.
Yeah. So
this is kind of crypto in a nutshell. Like, at the moment, it's like, as TradFi comes in and does and embraces crypto a little bit more, it's starting to challenge a few of the things, you know, like that we maybe hold dear, like self-custody seems to be under attack. Things like people like developers being charged because of you're starting to get in the way of broader laws of adoption of some of this sort of stuff. And then now you're starting to see that, yeah, maybe they don't want to come in and use our pre-made things. They want to build their own and have control and profits over them. And that kind of is what it is. What I wouldn't say is, like, it's not the only company, right? Like, we have seen some of the massive credit card operators in Visa and MasterCard kind of jump into a range of these different sort of chains. So, but it is an interesting move. I'm also of the view that, for example, that's a big issue for the RWA protocols that are out there right now.
Interesting shout. Yeah.
I don't think that any of these are going to be used by the big, but substantially by the big Wall Street firms. Like, I used to work at these firms. There is no way they're coming in and using somebody else's tokenization technology. Like, they can do that themselves, and they may even create their own blockchain to do it themselves as well. Like, there's no way that they would do that. So if JP Morgan can tokenize stuff at scale, and so does Goldman Sachs, they're going to build their own tokenization division.
What do you think of that, Grant? Because I want to bring something up there. Yeah.
Is this what I was saying last week? But I haven't had a look behind the curtain, but it just like makes complete sense.
Yeah. Because from an RWA narrative, for me, not to bring up names and stuff, exactly what you're saying, Mando, it's a strange concept for me to try and crack, this idea of attacking markets that don't necessarily need to be disrupted in that way from like a tokenization point of view. And then when you add this level to the conversation, what's the use case then?
The thing is, though, like, we're probably in, like us three on this call, are probably in a very unique position where if we wanted to go to the App Store in our certain jurisdiction, we can go and get exposure to any RWA asset that might be somewhat appealing or appetizing. Like, the remaining 80% of the planet probably doesn't have fair access or equal access to that in a permissionless manner. So I do see that. But at the same time, it's just like Wildcat have got a really, really good tagline. It's like, They're like an under-collateralized lending protocol that seem to be doing really, really well. And their tagline is "banking but worse."
Look, this is what I agree with. Is what you just said. Like, what it will be pushed into is the more obscure bits of private credit or EM countries where like the Wall Street banks don't operate or don't operate at scale. Like, if you want to tokenize treasuries, or if you want to tokenize bonds, stocks, MBS, like, they're going to do it themselves. But if you want to tokenize microfinancing loans in East Africa, like, you're gonna be able to do that. And I think that's actually where you've seen already some of the initial success has been, like you've just said.
Yeah. Right. Okay. To jump off that, and before we kind of curtail it with what we think where we're at market wise, because just everyone always wants to cover that, don't they? Mando, I want to talk about your many projects that we mentioned at the start of the show with Rekt and Yeet and stuff. And in the past 2 weeks or so, especially, Rekt is seemingly everywhere I look. What has been going on for you guys behind the scenes? What are you pushing? What has been behind that? Can you give us some insight for both people who maybe wouldn't have any idea and those that do and would want to hear it from the horse's mouth?
Yeah, sure. So Rekt was originally an NFT project called Rekt, which was created back in 2022. Just before FTX went down. I think it was around the time like Celsius was going down. We put it out, and like it's idea of like being Rekt. It's got this NFT of Rekt guys, of which there's like thousands of them, and they all show this guy who's like drinking a drink and just looks kind of wrecked. And it formed like this like an NFT community at the time. NFTs were still a big thing in 2022. So that's kind of how me and the co-founder kind of came in. And he's an artist. We're both from a TradFi background, but he like really embraced it when he came back. He'd been like an artist before and did some of it at college. And we formed a community there for a while. And then I think back in 2023, because the NFTs had like a drink part of them, we were like, oh, maybe we should. People kept asking, like, can we do a drink for merch? Can we do a drink for merch? So, all right, we'll create a drink. And then we thought, you know what? Let's make a company as well. Let's make a company now and make sure that if the drink does well, every single one of the NFT holders benefits from that. And then we went to our lawyer and he said, no chance. So we got another lawyer. And
can I ask, was it a crypto native lawyer?
and we managed to get it done. So we made it so that every single NFT holder got a share in this drinks company. And it was actually a broader company called Rekt Brands, of which the drink is going to be the first thing, and it's a US-based company. And then we launched a coin as well at the same time. So we made sure that everyone got part of the coin. So then you have part of this like three-pronged ecosystem: the original NFT, an equity, and a coin. And then we started in September of last year. We started selling these drinks, and they just started selling out like straight away. And what he made it is that every time you bought the drink, you got a bit of the coin. So when we released the coin, we made sure a lot of it was kept in the treasury, and we kind of felt like this was an embodiment of like the goodwill of the company. Like it would be our brand value.
Yeah.
And we kept on selling out drinks, and then the coin in the last 3-4 months started to rise. And then about 12 weeks ago, by the co-founder OSF, who's now like fully leading this alongside another one of the community members, of which I'm more like a chairman / advisor now. He put out a Rekt paper, a light paper, which just described this whole flywheel and how it would work. And then we started to really pick up interest, and we started doing big launches of different flavors of this drink alongside mainly crypto-based projects. We've done them alongside exchanges, alongside chains like Abstract, and the coin and the drink just kept on selling out. And every time you buy the drink, you got a little bit of the coin. And the coin went from trading at about $50 million market cap, which is not unheard of for an NFT community to have a coin attached to it, to now trading around 500 million. Which has been like a huge rise. And this has been in a context of kind of a bit of resurgence in NFTs. Pengu's obviously had a big rise as well on kind of a similar sort of goodwill around the brand and play, particularly around consumer products as well. And we've seen this with a couple of other NFT companies. And to be clear, like we still own in the treasury like 40% of this. We got like over 150, I think it's like close to 200 million of this coin now. Which we can use. We can give out each time we sell out the drink. We give out like 0.1% of the coin. So it's a very small amount, and it, you know, people have made many multiples of buying these drinks. We've then managed to use that springboard because we're closing on selling 1 million cans, which would, it would beat Red Bull's first year. That's what OSF told me. Like, in terms of cans sold. Now, Red Bull, we're not saying we're Red Bull, but like just to give you a concept of like it's been very, very quick. And then we're using that to get distribution in various different places. We went live in 7-Eleven now in the US, and because a lot of people in the traditional drinks industry are looking at this and going like, oh wow, so this is like you have this already built community, and you have a way to incentivize them with marketing, and it's cool that you kind of own that goodwill as well. And it's a non-alcoholic drink, so it's also this kind of it's a drink that you would have on a night out. It's like Liquid Death but flavored, and the branding is a bit more like, I was gonna say, you know, you're gonna have a night out, you would have a Rekt rather than just having like Liquid Death. So it's kind of adjacent to that, but we're thinking about moving into other fields as well, like energy and caffeine as well. And yeah, like we now have this kind of consumer products business with this pre-built marketing budget, and a lot of people taking interest in it because this as a way to build the brand in a coin in crypto, I think is suddenly become a little bit attractive. I kind of think that this is how a few different other brands in crypto may look to do it as well. Like have this consumer product style. We've completed the set by making sure that our holders got a slice in the company as well. So there's like, you have a company, a coin, and a product, and yeah, it's just been doing really well.
It's basically the ultimate crowdfunding exercise, isn't it? And like strength of community, and similar to what Luca and the Pudgy Penguins team did with the whole Walmart activations and stuff, and like attributing something physical and real world with the power that comes with tokenization and crypto.
I don't think in all sectors people understand how powerful aligned incentives through tokenization can be, and it can be applied in any walk of life or any business. You're starting to see like little hints of it. Like the deep in sector is probably the area where they've really figured out that you can pass on that bootstrapping mechanism as opposed to going burning hundreds of millions of dollars from venture funding. You can kind of like put it backside first and incentivize the like a crowdsourced community as opposed to burning a shitload of capital up front. So, but yeah, it's not being utilized anywhere near. So like any opportunity where it could be used, I think is just ripe for the taking. And I think you guys have fucking nailed it, to be honest.
Yeah, I think it works slightly better with brands than just deep in, because deep ins often are just revenue multiples, whereas with like brands, it's this idea of right, it's cool to be part of Rekt, to be part of that, so like you can trade at high multiples. We have completed the set, by the way, so they're also doing buybacks with the revenue of the drink, so it's like it is a full buybacks of the coin, that is. And
do you know what?
Yeah, sure.
Sorry, Mando, what I really, really like about this as well, and seeing like the performance of like, to talk about the actual token for a sec, it feels more like finally you have the ability to bet on the strength of a brand team and business and collective founders with real world experience in building a community and actual product that people want in real life, which is therefore
that access is not available unless you cut a friends and family check to someone and they go on and hit it big.
And we talk all the time, don't we, about like betting on founders and stuff like this in this space. And I mean, Kobe said it plenty of times in the past, hasn't he, about you buy ETH, betting on Vitalik, etc. But this is like the whole flywheel that you guys have now. Not to sound like I'm sitting and chilling anything, by the way. I'm just like majorly impressed with what I'm hearing.
Well, I think it came at the same time as this whole internet capital market stuff as well.
Yeah.
And I think where that slightly broke down is sometimes like there wasn't the complete set of like you own the business as well. And it was like, hey, now we have this coin worth 100 million. Like, how are you going to do the flywheel? How are you going to do the flywheel? And like, there can be leakage. Like, you got to still run the business at the same time. But we make sure that like you're going to benefit the business as well if the coin does well, or if you just want to own the product, right? So like, I think you have to kind of find a way to make sure that each bit of it doesn't get lost. And yeah, we're hoping that this kind of continues. There's been a bit of a resurgence right now in NFTs around this whole brand, because I think with meme coins, they were all a bit more transitory. Yeah. And now with NFTs, they were slightly better at creating communities, which have kind of lasted. So some of these communities that have lasted, which have brands, suddenly they're looking to do this. Moonbirds has done something very similar, and they have like a trading card business. Obviously, Luca's got a ton of different things he's doing, but I'm starting to see people thinking about doing this with tons of different, like I think Animoca just took a stake in Cool Cats, right? Which, I mean, if you weren't around in 2021, you won't remember any of these, but like these are old NFT brands, which people are going like, right, this is actually an IP play, which I can attach in a very similar sort of way with a flywheel, maybe a consumer products business, and do the same sort of thing. I personally think also that these become interesting businesses in public markets as well. Like we haven't seen a publicly listed company list a token, right? I don't think one has done it. Some did NFTs. I know Nike did like dot swoosh for a bit, but everyone got scared off by the legal stuff. It now suddenly, it now suddenly feels like the equity story is back, right? We have treasury companies. Everyone's trying to do something in crypto, and I think that, and I'll use Pudgy Penguins as an example because I think it's slightly better. But if someone big were to come in and buy Pudgy Penguin, I think the coin would go up a lot. They would be able to use that for their own marketing efforts as well, probably in a very similar way that we are doing. You know, like you get a bit of a coin if you watch the Pudgy movie, or if you use the game, or if you buy our merch, and like there's some sort of flywheel there, and I think there's a way then that the NFTs, the token holders, and the equity story for a public market company coming in to buy them would also make sense. So because you can now do things with tokens, like suddenly you're allowed to do stuff in the US with tokens. So I think that's why there is some sense to why these things are suddenly trading at a high premium, because if you can buy a crypto native IP, like you can actually do quite a lot with it with a good business and a good distribution model.
As you guys are proving. So look, just to kind of round things off, ETH is pumping. What does this mean, fellas? Final thoughts? Is it end of times, or are we are we bullish forever?
It's over. ETH's
by the top forever, Laura.
I don't know if I think that ETH. I luckily got this one right. So I did kind of get in, not at the first pump, but when it went like 2,300, 2,500, I was like, right, I said to myself, as soon as it broke out versus Bitcoin, like you would feel it. And I just felt like this was the time. It did then range for like 2 months before it started moving again. But now it feels a lot more consensus, right? It feels a lot more consensus. It feels like everyone's now ETH's a trade. Everything else is dead. I don't think you necessarily fade that just yet, because I think that if you did that when the Bitcoin ETF started going and everyone started going like that, like you would have faded it too early. But it's certainly not the trade I think it was, where it was like it was a hated rally. Now it feels like a lot of people are suddenly in this, and like each going to 15K. So I'm definitely a bit more wary of it.
Right.
I'm reducing it back into Bitcoin a little bit more now.
Tom Lee told me 500K per ETH, so. you need someone like that just beating that drum though. You need like, I can't remember who said it, but on the timeline they said the worst thing we ever did is teach the normie crowd what FDV was.
Yeah, I've seen that a few times. Anyway, we've been yapping for over 45 minutes now, which is usually the cap that we try and keep these things to. So I just want to say again, final shout as well for you, Mando, as well for Yeet and Rekt and everything that comes with that. Thank you so much for coming on, man. It's been a pleasure. I've been wanting to do this with you for a while. Grant,
I love it, guys.
I'll see you next week. Well, I won't see you next week. Actually, I'm going to Ibiza. You can hold it down.
I'll hold down the fort.
Yeah, but Mando, Grant, pleasure, guys. Thank you very much. See you on the next one.
Easy.